My name's Paul Arkelian. I'm a licensed insurance agent in the state of California, in Nevada, and in New Jersey. I'm also licensed for securities. I had a company called California General Insurance and Financial Services. So most of you guys by now are probably thinking that term life insurance is something that I've never sold, I never believe in, or whatever. I mentioned in my speech that at times when you have temporary needs, term insurance is necessary. And that's exactly how I do insurance planning for my clients when they do have a large need for insurance or a need for large life insurance policies, but they're not liquid enough to pay for a permanent product. I do supplement the permanent product with term just for the temporary needs. For example, if I have a client that comes in, husband and wife, they're in their early 30s, they've got kids that are 7 and 4 or whatever, and they need at least $1 million or $1.5 million of life insurance because they're raising kids. It's very costly. If anything happened to the breadwinner, they want to make sure that the lifestyle doesn't change, and they can't afford $1.5 million each one of whole life insurance, participating whole life, or a guaranteed universal life product. I would offer them $500,000 of permanent life and $1 million of term, a 30-year term, or maybe even a 30-year term with the cash back, meaning that they return the premiums back if you outlive the policy. That's something that's been around for the last maybe 5 to 7 years. It's a good product. It's not, at least you get your money back, but your money is, at that point, inflation has probably done a number to your dollars, but at least you get something back. Not complete loss of your premiums, at least you get your premiums back. So I do sell term, but only to satisfy those temporary needs, only to satisfy the large life insurance need. But I don't sell term and name it as your main protection, your assets, your estate. It can't be. What if I outlive it? What if you outlive your term? Then it's meaningless. People ask me, well, which life insurance policy is good for me? So for how long of a term should I buy? And I ask them a really senseless question. And I'm going to do that now too, and I apologize for that. But I ask them, do you know when you're going to die? I mean, if you're going to do it in 10 years, why sell you a 30-year term? Might as well sell you a 10-year term, and that's cheaper. So you spend the least amount of money out of your pocket and leave the same amount of death benefit to your children. So I'm not against term. I do sell term insurance. I don't sell a term insurance policy to a 25-year-old young person who I know 95% or more chance will outlive that policy. Now, if they are married, they have a child, or they just bought their first condo or something, they have their first liability put on their shoulders, and they can't afford much, and now this is their earning years where they're probably spending more money on investing, depending on their need. They're going to need to be more liquid to be able to spend that money, buy their second condo or do things. Maybe I will sell them term, but also offer them some permanent life insurance policy. Because your permanent life insurance policy, keeping the same premiums over the number of years, to age 90 or to age 100, it becomes discounted for you. I understand that the end result, that the main death benefit gets discounted as well because of inflation, but your premiums remaining the same. I give you an example. In 1987, basic cable cost $9. Now in 2012, basic cable, at least around Los Angeles, costs about $66 a month. I had somebody fix their basic cable premium at $20 in 1987 when everybody else was paying $9, and they were paying $20 lifetime guaranteed payment for cable. All their neighbors back in 1987 would have thought that they're crazy. I mean, they're paying $9 and then the neighbors paying $20. They must have a problem upstairs. Now the same neighbors, had they stuck around long enough in 2012, would have been paying $66, and they would have said our neighbor was a genius because he has a $20 payment for his cable when we're all paying $66. And I like to use that as a parallel to our habits of thinking or buying our life insurance policy, saying, well, it's going to increase in the future, that's okay, I'll get a 10-year term or 20-year term right now. Well, get the term, but get it only for the temporary needs. Also have some permanent life insurance, because the permanent life insurance, first of all, will offset any costs of the term insurance at the end when you outlive the policy. Second, it will have an asset for you even at age 80 or 90. You could use your permanent life insurance policy as a retirement tool instead of giving away your home at retirement to the bank as a reverse mortgage. Why give away your assets to the bank just so they will let you live in the house and give you some money back and end up keeping your home? Why not own a life insurance policy that will be permanent, that you can have at age 70 or 80, and take out whatever amount of money you need to take out on your paid off property. Use it as you wish, enjoy your retirement, and assign the death benefit from your permanent life insurance policy to the bank as their interest may appear, whatever amount you've spent out of your line of credit. Have that thing get paid off. Have your next generation own the assets, own the true capital. That would mean true ownership.